Morning, everybody. It's September 6, 2022. My name's pianomattyb. That is Scaramucci's. This is your morning TA. A brief glimpse into the crypto markets where the sun's shining, where the wind's blowing. All the humble opinion of this piano. Zamboni, bring in the The FOMO index has inched down to 22 from yesterday's 23. Bitcoin dominance is 38.4%. 24-hour volume 70 billion. And sing it with me now. Heartbreakingly low. And the overall market cap is 996 billion. Give or take 100 million. A minor seventh, just when you thought a minor chord had a chip on its shoulder, which all of them do, you throw in a seventh in the mix and you have a real problem in the relationship. Much like borderline personality disorder, there's no real fixes to minor sevenths. You just have to run away as fast as you can. You're not gonna fix them. They're broken and they enjoy being broken. It's how they lull unsuspecting suitors into their trap. And for every broken minor seventh chord, there's a weak suitor to play search and rescue. Don't spend too much time with a minor seventh chord, alas, you too become a minor seventh chord. Well, despite having a Labor Day weekend filled with dinosaur rants and zombie groans, Bitcoin seemingly didn't respond much, which, if that was a friend of mine, I'd tell them, hey, you're doing all right, buddy. After shooting up to our level of interest, 20.5, price action got insta-rejected all the way back down to our descending channel bottom, 19.5, went for a secret Sunday pump, but was timed out by the 50 moving average, fell back down and had the brightest of bright ideas yesterday, shooting up to our descending triangle's resistance line, peaking out at 20.1, and has cozied up between the two pillows of the 20 and the 50 moving average, a time of production 19.9. My upside targets for the day would be a retest of resistance up at 20.1, maybe flipping resistance to support, failing that flippening. We'll just dump right back down to test resistance at that level we've been droning on and on about ad nauseum at 19.5. For housekeeping's sake, we'll log in this week bearish divergence to keep the TA union cronies off our back. Now over on the ding dong, aka the daily chart, we've essentially skated down our support line. I'm going to establish a descending channel resistance line up here. Give us an upside Hail Mary target of 21.3. But first, we'll have to huckleberry that 20 moving average at 20.5. We'll either see a rejection and a retest back down to support, or we'll get through her and shoot for the Hail Mary. Now over on the Wookiee, aka the weekly chart, we've closed our candle green, but not without some significant bearish pushback. Closing green this week will be staying above 19.9, but ideally, to demonstrate any real bullish prowess, we'll have to candlestick this wick and close above 20.5. Skadoo-yadoo-doo-doo. Honorable kudos goes to the Dixie for hitting a 20-year high of 110, putting mega pressure on almost everything. But let's log this bearish divergence into the books and see if she helps ease the pressure and Let's recap, shall we? The 4-hour up and downside targets are 20.1 and 19.5 with a dash a week bearish divergence. The ding-dongs established a descending triangle Hail Mary target, 21.3 if we huckleberry through the 20 moving average at 20.5. The Wookiee closed green but somewhat weak, hoping it can flex with a close this week above 20.5. An honorable kudos to the Dixie for painting in a 20-year high of 110, putting pressure on basically every living thing. Hopefully the bearish divergence can cool its jets. Coffee cups and peepers in the comment section, my friends. And remember, we're playing the same game as our psychopathic elected leads. That's right, it's the long game. So zoom out and have a fantastic day. Sing it with me now. Oh, run the banks of boom dash bank, Bitcoin, crypto, morning tea. Hey, whoa. Make sure you like and subscribe.